Guys, I would like to share some ideas with you that I think will be incredibly beneficial to you. So I'm going to start the slide presentation and hope that you can see the presentation and as well as you can hopefully see me. So here we go. I'm Dave Snyder, and most of you know that I was raised in a ministry environment. I was born to two college students at Bob Jones University dedicated to going into ministry, and that's what they did. So they built great communities, and I grew up watching them build great communities and also watch them survive by doing things in real estate to improve things, typically buying an asset below market and fixing it up and that type thing. So that's what we're talking about here today. The difference is today, this particular asset is one that the recent tax code says that what you invest in it will be 100% deductible because of bonus depreciation. The Jobs Act of 2017 has been reenacted here in 2025. This project would be very similar to projects I bought for over 25 years. I started in earnest when I was in seminary. And if you guys would like to see some of those before and after and what I bought and what we did with them with the process, it'll be similar to this. Feel free to just request it. Scan the item that you see there on your screen, and we will get it out to you a free PDF copy of my most recent book called Earn More and Worry Less. But we're talking about an apartment complex in Sherman, Texas, currently called The Legacy. And the disclaimer is I'm not an attorney or a CPA. You're welcome to consult an attorney or a CPA with regards to any of your investments. This is really, this is not presenting a private placement memorandum, but if you're interested in that, we will get that to you. We do recommend that if you get them advice from folks that have invested in real estate and understand it. But we're going to give you a bit of an executive summary overview of why we're buying it and why it's a good deal. This Thursday morning, I'm boarding a plane early AM, close to 6 a.m., and we'll be there for 3 or 4 days with this one and reviewing it with the management team and the market and location. We're going to give you the steps involved here. I partnered with Greystone Capital Group because I met at a function over at the cash flow portal area a gentleman who was a former CPA in New York City. He was my son is a Columbia student, PhD program. He thought he would go to Rutgers. My son did, but he ended up going to Columbia instead. Anyways, this is a Rutgers grad and a CPA. And for 20 years in New York City, he oversaw 100 people in accounting and worked with the Financial Accounting Board. And he saw enough tax returns of multifamily and self-storage people that he began to move towards that 2015 to 17. And by 2018 was full time at it. And so his approach is very accounting based. And we have a very incredible CPA accounting based team. And so I have partnered with him, and he's also a mentor of mine and sponsor and that type of thing. So we plan to hold this asset for 3 to 5 years. We have multiple exit strategies that will allow the flexibility to refinance and sell the asset, or depending on local market conditions, we may be able to. We're going to be giving maximum return to our investors. At year three, we plan to refinance and return capital back and hold the asset for long term or sell the asset. But at year three, we plan to return 70% of the equity back to the investors, as well as you get an incredible K1 gift of depreciation of whatever it is you put into one of these. So we wanted to let you know, here's the details, and I'm going to go through this fairly quickly for time's sake. If you would like to be a part of the webinar that we are going to do on Wednesday evening, let me know. It will be very similar to what you're seeing here. It'll be the exact same slide deck. So here's the interesting thing about Sherman. It's just above Frisco. Some of you are familiar with the Chuck Swindoll Church in Frisco, where Frisco and Sherman are north of Dallas, and they're communities where a lot of people work and like it, and they're safe communities, clean communities. This particular one is an incredible location, and we'll talk to you about that in just a little bit, but we're able to buy it at about half what the other properties are selling for nearby. It'll show you that the average price of a market comparable in the area is $105,000 per door, give or take. There was one sale for $129,000 recently nearby, similar type of property. We're able to buy it for just under $65,000 a door. So if you do the math, we're going to do pretty well on this one. It will put you in a tremendous advantage when it comes to returns. And as you may recall, returns are very tax favored when it comes to multifamily. Not only can you deduct whatever you invest in it, but also any returns in the way of rent payments, those can be returned as what's called a return of capital. So it's not a taxable event. The value added opportunity that we have here is to continue implementing a little bit nicer parking. They've already got partially covered parking. As you may notice in the picture there, we can extend that. We can institute RUBS represents a ratio utility billing system whereby we say, you're using about this much of the water. We'd like you to pay that portion of the water bill. We're going to institute pet fees, late fees, put in a laundromat, and offer U-Haul services, which will increase income, and we're going to do some things to decrease expenses. So the value of the property will be forced up using those techniques. And we can also turn the office that's been used into an office, or currently used storage, converted into a studio bedroom apartment. So we can actually make this into a 32 unit. It's currently occupied at 93% already and cash flowing positively from day one. So we're grateful to have this opportunity. I want to tell you a little bit about the management team that I joined. Jonathan Way is the gentleman I said had his career as a CPA for many years prior to being just full-time in multifamily and full-time in self-storage. And he is part of the mastermind that I'm a part of. And we work together closely on a weekly basis and on a daily basis. Conrad Boyd is also a CPA who does a lot of the underwriting double checks. And so you have multiple sets of eyes looking at everything that you're seeing here, and you actually get to see the property on cash flow portal, which you'll have access to on your smartphone. So you can see how your investment is doing, the progress of each property and that type thing. So it's fantastic. Most of you know me. If you're tuning into this, you know that I've been in real estate acquisition and renting out and then sales and that type thing similar to this for over 25 years. And giving strong returns to investors consistently is something I'm quite interested in, and we've been doing for quite a while. We've been raising and utilizing private capital for about 8 years and returning monthly checks to investors for that period of time. So continuing, let's talk about the market. It's a beautiful downtown. It's a fantastic local area. Texas, as you know, is already ranked as the number one most business-friendly state in the U.S., which is why Tesla relocated from California at great expense to Texas. Sherman's population has grown 13% since 2020, and it's projected to surpass 52,000 by the end of this year. They have currently a city-led infrastructure and tax incentives that's going on to make it a more beautiful downtown with more green space, and tax incentives that have attracted a lot of global tech leaders, former employers. For example, two of them would be Texas Instruments is planning, they already are in the process of building a $35 billion plant there. It'll be somewhere between 35 and 36 billion, where they're going to make lots and lots of wafers. It'll be their largest in the United States. Global Wafers is also building investing over $4 billion in a plant that'll do something similar. So that itself is creating over 4,500 high paying jobs, and the market continues to grow besides them. Located 40 miles just north of Dallas on US 75, it's easy to get to Dallas if that's where you want to go, but it has affordability and metro level growth potential, and it's a safe place with great schools. And from this apartment complex, you can walk to the bus line to get to work, or you can walk to a good school for your children, and you can also walk across the street to a pizzeria. So it's a great location, and the market is tremendous for what it's worth. D Magazine has said, the great Sherman land rush, what happens when 40 billion pours into a North Texas town so small that half its population could fit into a high school football stadium. Sherman's about to find out. So we believe there's going to be tremendous growth in Sherman. And if you look at the map, you'll see that Sherman is just north of Dallas. So these are simply showing you some of the infrastructure plans that the downtown has to improve and enrich the lives of people as they prepare for more people moving in. And we're going to be capturing some of that. And Texas Instruments, this is their announcement that we're building a new 300 millimeter semiconductor wafer fabrication plants in Sherman, Texas, that will manufacture millions of analog and embedded processing chips. And the potential $40 billion investment includes plans for up to 4 connected fabs, excuse me, SM1, 2, 3, and 4. So this will rival anything that was ever done out in New Mexico. And I used to live in New Mexico when one of the chip manufacturers was one of the major employers out there, or at least number 2. Demographics, you have a lot of people that are younger, family people that are looking to work and raise their families there. We're finding that more and more of them are choosing to rent because the average price of a starter home, the mortgage is now $2,700 for a $360,000 house, even with down payment assistance. So a lot of people are choosing to rent until they can figure other things out. But it's a tremendous area where the median household income can afford to rent apartments as well as have a life and raise their kids. Our interest is in helping the kids by offering tutoring services and other events for the community to help build a community out of these apartment complexes that we're acquiring. I can tell you more about that later. And if you'd like a copy of the book that I've just about got done, an ebook called 101 Ways to Improve Your Apartment Communities, you can let me know. If you scan the code, it should be on that digital business card. There's a lot of businesses in the area. It's not just hoping that the wafer manufacturers will come in. You've already got over 2,000 businesses. You've got a lot of high school graduates. You've got a lot of associate degree people. You've got a lot of bachelor's degree people. You got a lot of graduate degree people. So you have a wonderful neighborhood in which you would like to live. If you'll notice on the side of the screen where you see the star, the Legacy Apartments, and we may end up changing the name on them there, but nonetheless, they are in a location that is walkable to a lot of wonderful places, and it's in a very safe community and a very convenient spot. And you can jump on the highway and you can be anywhere you want to go pretty quickly. You'll notice you're at the intersection, near the intersection of two major highways there. So it looks like 75 and 82. So to talk to you a little bit about the property, if I went too fast, this is just telling you I'm going to talk about the property. The purchase price, we're buying it about half price. So we're purchasing it for $64,516 a unit, under 65. It was built in 67, but renovated in 2023. You have 3 units, 4 buildings, 2 stories. It's slab. It's got copper wire. It's got panels and breakers were replaced in 2023. It is individually metered. There's no gas on the property, so we're not going to have any explosions of that nature. You have PVC sewer lines. You have vinyl wood flooring, and the roofs were replaced in 2020. You have concrete and partially covered parking, which helps. That's a favorable thing in that community. So we're buying a good property at a very good price. The unit mix currently, notice the in-place rent is about $100 shy of whatever the market is for everybody else. So there's room to raise the rents gradually and improve the net operating income, which will improve the returns rather dramatically. So you'll see that. And you have studio bedroom apartments, 1 bedroom, 1 bath, and 2 bedroom, 1 bath apartments, which is probably a very common, popular offering if you have a family. Here's what they look like from the street and from an aerial perspective. You've got room to put in a laundromat or some self-storage units and garages and things like that over near those trees. So that's something that we can consider as well. But the business plan as it is extremely good. And notice you're between 2 streets where you can walk to some great things in a very safe neighborhood. The features and the amenities, you've got great refrigerators, you've got some covered parking, range and oven. We're implementing a ratio utility billing system. You've got the vinyl flooring that looks like wood. And again, it's a walkable neighborhood where people can walk their dogs, their children, ride their bikes. And there's the floor plans as you see them over there. If you'd like a copy of this, let me know, and I'd be glad to send you a copy of the slide deck or any pieces of this. I'm moving just for the sake of time. Here's pictures of what they look like inside. It's a clean property that is respectable, that anyone would enjoy living there. They have some modern features. And what we are going to do on building 2, we are going to replace a roof on one of them where the roof was not done correctly. We're going to install better gutters and a better drainage system. We're going to update the signage and install security cameras. People feel more secure when they see security cameras. We're going to convert the existing office space and storage into a rentable studio apartment. And then we're going to exercise some water conservation features. The roof repair will cost, you'll see what our estimates are from contractors currently. So your exterior renovations are going to total under $50,000 and your interior renovations are going to be about half that. So we are going to spend about $68,500 total on exterior and interior renovations as part of this business plan. And we'll show you how we'll be improving returns dramatically compared to anything else you could invest in right now. plus the tax benefits by doing just these simple things. Notice the old office unit currently, and what we propose is to use it as a rentable, sellable unit. So that just shows you what we're doing there. And we will be installing the lower flowing shower heads and toilets. And so our investment will be just under $10,000. It will raise the property value 101,558. Some of you may know or may recall from previous illustrations and some of these teachings that I've done, trainings, is that for every dollar you can either decrease expenses or increase your revenue by vending machines or saving money on utilities, whatever it is, you increase the value of the property 20. So it's a multiplier of about 20. So when we put in less than $10,000, you're getting dramatically more back in that. In this case, you're getting 10 times your value back. So the estimated annual utility savings will be over $5,500, and you'll have that for the life of the property. Now, since we work with an accounting team, they love to do cost segregation, which gives additional depreciation opportunities. And this just explains it to you that, in other words, understand the flooring is not going to last the 27 and a half years that the IRS says a commercial building will last. And so the flooring can be depreciated quicker. The roofs can be depreciated quicker. So we do a cost segregation study, and we take additional items that can be depreciated quicker in addition, and we add those in. So this is giving you the illustration and the layout of that. If you'd like more detail on that, let me know, book a call. I'd be glad to walk through you every detail. For comparables, if you want to look at other properties nearby, there are some that are renting out their 2 bedrooms for $1,125, and the Castle Hill is offering their 2 bedroom, 1 bath at $1,890, and the Ridgeview at $1,053, River Ranch at $1,144, Northridge Dallas at $1,031. Legacy Apartments, we believe we're going to be able to raise them up a bit higher because they're currently lower than most of the others. So if you notice at the bottom, it's showing you how we compare to the others in the market. We're the low ones. We like to do that. We like to buy properties that are in great shape, but somebody hasn't raised the rents. There's room for improvement, and we like to get them at a good price as we're getting here. Sorry about my throat. This will show you property sales that have occurred in the last year or so or less. And you'll see somebody paid 129,000 plus per door. Somebody paid 80,000 per door. Somebody paid just under 105,000 per door. The average is about 105,000 per door. So we're getting ours at a favorable price, and we're looking at comps showing you that. For the financial information, we will be raising some of the monies. We're getting a loan for 1.3 million. Then we're raising the down payment, and the loan interest rate will be 6.2. 30-year amortization. For the first 12 months, we'll get the benefit of interest only, which will help us with cash flow as we renovate it. And then the closing costs will cost about 4.5%. There will be an acquisition fee, and there will be some CapEx repairs and a management expense as well. But nonetheless, we're raising $1.1 million, which is not a lot. The average investor typically is investing between $100,000 and $200,000. So we won't need that many investors for this. But if you're interested, let us know. And what you do is raise your hand, especially on that seminar, and type in the chat, Dave Snyder invited me and I'm interested. I would like to proceed and get more information. But you can also query me and let me know, and I'd be happy to answer your questions. Here is the actual financial projections on a spreadsheet from year 1, year 2, year 3, year 4, and year 5 when we sell it. And it'll show you what's being spent. It'll show you what's being spent in electric, contract services, bookkeeping, taxes, trash removal, management fee, payroll, turnover, water, sewer, all of those things. It'll show you how we're gently increasing the rent as people move out, upping the next lease. And we'll be doing things to make sure that they love it there and want to stay and want to invite their friends as well. So this is the type of thing that you will have access to on your pocket PC or your cell phone, so that you can see everything that's going on with your investment using Cash Flow Portal. This is data that's going into it and coming out of it. So notice this is showing your investment returns, your cash on cash returns. In other words, your monthly or quarterly distributions from the rent will be just a little over 6%, which is very respectable. Should be returned back to you as what's called return of capital. Also, when you do cash out at the end of 3 to 5 years, we are averaging an annual return of a little bit over 19%. That's a target. None of that's guaranteed. That's just showing that's a standard business model. And the internal rate of return is 15.78%. So it puts you up into the teens and a strong return plus the tax benefits of being able to invest in bonus depreciation, writing it off. So here's the timeline. We already have gotten our purchase and sale agreement accepted. And on the 25th, which has just happened, the due diligence completed. So we have a webinar coming up here this Wednesday night on the 30th. And we will take interested folks and send them the appropriate data, the PPM, to look at. PPMs just tell you all the things that can go wrong and how we're going to mitigate it. And so you understand the risks. And August 1st, the investment is available for subscription and funding. And then we plan to close by September the 15th. I hope that's helpful to you. Feel free to, if you're interested, to reach out to me. You can also scan this and it'll take you to the investor portal where you can already get pre-qualified and submit information saying that you are an accredited investor and that you'd like to proceed. Down below, you'll see my email address and phone number, as well as Jonathan and Conrad's. If you like what you see and it's something you've prayed over and chewed over and it's something you want to do, then at some point you'll wire the funds to the closing attorney, to the bank account that's held, and then you will receive confirmation of that and you will get regular routine updates on your project. I appreciate your taking time. Appreciate your taking time to listen to this today. And I'm going to conclude by saying, if you have any questions, give me a shout and we'll look forward to helping any way we can. And I'm looking forward to your participating and getting a lot of benefit out of this. Hope you have a fantastic week.